Good afternoon, 1 o'clock, so I'm going to go ahead and get started. If you haven't already muted yourself, we ask that everyone go ahead and put yourself on mute for the duration of the presentation. And we will have a Q&A session after the materials are done. Go ahead and answer any questions you may have. And as we mentioned before, we will have the chat for you to use to go ahead and submit your questions. So first of all, on behalf of all the partners of Kushner LeGrace, I would like to welcome everyone to today's session. We were very pleased to see the list of not only clients, but also the friends of the firm that we have attending today. So we're very pleased to see the participation levels. And we're aware that, as a firm, the only real assets we have are our people. And that includes not only our employees, but also our clients, as well as our partners and collaborators in the legal, financial, insurance world. And we're able to have work with great individuals. I'd like to introduce myself. My name is Dean Martin. I am a tax partner here at Kushner LeGrace. I started out my career at KL in August of 2006, right after Hurricane Katrina. That's another instance of both our firm and our clients going through some very unusual circumstances and just working through it and coming out stronger on the back end. And we're confident that we're going to have another instance of this as well as we navigate this COVID-19 and all the issues it brings. And part of coming out stronger, hopefully, is going to be this PPP program. So we're happy to discuss this with you today and point out some things, hopefully that you can do to get the full benefit of the program. Just some housekeeping before I get into the materials. I do have the screen share feature enabled in Microsoft Teams. So if you're following along via MS Teams, either on your computer, on your desktop device, you should be able to see my screen with the materials of the presentation. We did send out those materials prior to the presentation. If you're following along just by using the call-in, so I'll call along the pages as I go through. And then also we will be recording this seminar, so you can get a recording after the fact, that'll show the screen as I toggle through the information. We'll post that to our website, and then also make it available to you to distribute to any members of your team who are going to be involved in the PPP process that we're not able to start and attend today's seminar. So an overview of what we're going to discuss today. First, we're going to discuss the timeline and where we are now as far as what's going on in the last month to 5 weeks in regards to the PPP program. We're going to walk you through a sample calculation of the forgiveness. We're going to discuss some uncertainties that we expect to be cleared up by the SBA once they issue their regulations on the forgiveness. And when we set this meeting up last week, we hoped that those detailed regulations would be issued by now. The bill, the CARES Act, does call for the SBA to issue those regulations, and they set a deadline of 30 days after passage of the bill. That 30-day deadline expired on Sunday, so we are expecting SBA to issue regulations on that, hopefully very soon. But we understand that some of you have already received your PPP money, and it's time to move along to the next phase, which is planning for the forgiveness. So we think it's important to start that process now, and that's why we're moving along with the presentation before we actually have the regulations. We're also going to review, finally, a best practices cheat sheet, so to speak, that we put together. That's just a one-page summary of what our recommendations are at this time for you to consider as you navigate the forgiveness process of the Paycheck Protection Program. And then finally, like I said, we're going to close with some Q&A. Feel free to submit your questions on the chat feature of Teams. If we can't get to your question, we'll certainly encourage you to follow up, and we will get you an answer to your question as soon as we can get that in and have it reviewed. Without further ado, I'll go ahead and move on to the first phase of our presentation, and that's going to be the PPP loan timeline. And I'm not going to go over every single item in here. You can see we've been dealing with PPP issues for about 5 weeks since it was first passed in the Senate on March 25th. And one of the takeaways I want you to get from this is this timeline is very much compressed from what we would normally see in the process of a bill being passed by Congress, the executive branch issuing its regulations on how it will administer the law, and then that law coming into implementation. So, normally what may be a 6 month to 1 year time frame has really been compressed down into less than 2 months. And if you look at the timeline, you'll see the SBA started accepting applications on April 3rd, which is before we had some very important guidance issued by SBA on some various questions on exactly what payroll would be eligible to be loaned on. We're kind of getting to that point again now. If you look at the very end of the timeline, still to come are the regulations governing loan forgiveness. So we have applicants who have got their money are now going through the forgiveness window prior to the regulations being issued. So just like on the application process, we're going to have to consider the guidance that we have and monitor additional guidance as it comes out and see if we need to alter any of the plans that we had previously. And like I said, we're monitoring those regulations, and as soon as they come out, we're going to get more instructions to everyone in terms of how they can best go about utilizing the avenues they have for loan forgiveness. So now we're going to get into the sample loan forgiveness, and that's going to be on page 3 of your materials to start. So this is a generic client who would have received a PPP loan, is now doing their forgiveness calculation. And you'll see the watermark at the bottom of the page. This is a draft. It is subject to change depending on the details that are provided in the SBA regulations. And as we walk through this stuff, I'll be sure to point out, the things that we are including on the calculation that are a little gray and that we expect to be cleared up on the regulations. So we're going to jump forward now to page 5 of the materials, and that is the payroll component of the forgiveness. This is going to be the bulk of the forgiveness that is eligible to you. And what you have is an 8-week window. Your 8-week window starts with day 1 being the day that you first receive funding from your lender of your PPP loan proceeds. So start with that date, count 56 days forward. That is your window on forgiveness. And the first thing that you would do to calculate your expenses eligible forgiveness is consider your employee payroll. This payroll calculation is going to be quite similar to the initial calculation of the upfront loan as far as what you can include. You're going to start with gross wages paid to your employees. You'll see at the bottom, we list specifically, this is verbatim from the bill, of the various compensation that is included in that. And it's going to be pretty much almost any wage or cash compensation paid to your employees. You're going to also be able to include payment of any kind of group health benefits, whether that be costs of administering the program or insurance premiums themselves. We expect that is going to also consider vision insurance and dental insurance. We expect the regulations will clear that up. But certainly any kind of health insurance you would add into your health benefits category. You can also include any kind of retirement benefit paid by the company, and also any state and local tax that's assessed on compensation of your employees. And here in our region in Louisiana, the one expense we expect everyone would have in that regard would be state unemployment taxes. We'll see what the regulations say, but I'm not sure that we really have much else other than that for our specific state and locality. And the next thing that we need to consider, which was not a part of the application calculation of payroll, is any kind of paid leave that you pay that's mandated by the Families First Coronavirus Act. So that would be mandated paid sick leave or family leave. Since you're able to get a payroll credit on that reimburses you 100% of the cost of those paid leave wages, the CARES Act would call for you to back out those wages from the definition of your payroll during the 8-week period that is eligible for forgiveness. One thing I wanted to point out too in this regard, as far as a business owner would go, is further guidance by SBA has clarified that if you are an owner and you're a member of a partnership and you're an active general partner, you can include compensation paid to you in this payroll definition. And the partnership would include it in its computation for its payroll loan. If you are an owner of an S corporation or a C corporation, you would include your wages, just like your employees, in this calculation. If you are self-employed or an independent contractor, you can get the payroll part, just like we discussed before, for any employees that you may have. For yourself, for your own compensation, you're going to include 8 weeks prorated your 2019 net profit as reported on Schedule C as you reported to the banks. So that's going to be the total amount of payroll paid that could possibly qualify for forgiveness. And after you add all of that up, the next thing that you're going to do, and we're going to move on to page 6 of the materials, is to apply the compensation for excess wages paid to an employee. You're allowed to count wages paid that are below annualized $100,000 a year. So if we were to prorate that $100,000 per year down to an 8-week period, we get $15,385. So you can count compensation paid to your employees or yourself up to $15,385. If you pay in excess of that, it's allowed, but you cannot count that as an expense eligible for forgiveness. So you can see in our sample calculation here, I flip back to page 5 real quick. We had total payroll of about 209,000, but when we looked at the payroll paid to individuals in excess of 15,385, we had wages of about $70,000 that were in excess of that. We need to back that out from our calculation and not include this as payroll eligible for forgiveness. And then the second part of the calculation probably is not going to apply for most applicants, but it is in the bill, and that's any compensation that you pay to an employee who has a principal residence outside of the United States would not be eligible for forgiveness also. And that's the first part of your payroll. Next, and we're going to move to page 7 of the materials. This is a new component of the PPP program that was not included in calculating your upfront loan cost amount, and that's your other costs. So you were able to take out a loan for about 2.5 months of your payroll. And the forgiveness window on that payroll is about 8 weeks. So you are loaned about 11 weeks roughly of your payroll costs, and then you get forgiveness on 8 weeks of payroll paid, starting with when you get the proceeds. So there's going to be a gap there in general between the loan that you were able to receive and the portion that's going to qualify for forgiveness, as far as an 11-week loan and an 8-week forgiveness period. What you can use to fill that gap and obtain additional forgiveness are these other costs. So as we go through these, again, at the bottom of the page on page 7, we have the definition of what these costs are. This is verbatim from the bill. The first one I'm going to discuss are mortgage obligations that are covered. And a covered mortgage obligation, first of all, is going to be the interest portion of the payment only. So principal, or if you have escrows, that would not be included in what's eligible for forgiveness. But it needs to be a liability of the borrower, and the debt needs to be secured by either real or personal property of the business. And your personal property would be things like equipment and furniture. And then finally, that debt needs to have been incurred prior to February 15th. So those are your covered mortgage payments. Also, another cost eligible to be counted for forgiveness are covered rent obligations. And that is payment of rent that's under a leasing agreement in force prior to February 15th, 2020. For these two, the mortgage and the rent, there's nothing in the bill that specifically says this must be real property. So the thinking right now, and we'll see if the regulations confirm this, is that mortgages or rents on equipment would qualify. Again, we need to make sure that that is a theme that's consistent in the regulations as well. And then finally, our third category of costs, which is going to be more numerous than the first two, are going to be all your utility payments for a covered utility. Again, the utility service needs to have been started prior to February 15th. And the definition of covered utilities is going to include electricity payments, gas payments, water, telephone, internet, which are all fairly. Other part of the utility payment is transportation. That one is not so clear. We're waiting to get more guidance on exactly what is included in transportation. One of the regulations issued did allude to the fact that gasoline paid for business vehicles would fall within the definition of transportation. That was a very brief cite, and it's not all inclusive. So again, we need to see exactly what we can include in those transportation costs, things that could potentially fall in that category. And in addition to gasoline, you may have mileage reimbursements or other kind of transportation costs, vehicle leases, if they're not included in a rent payment and it's for a true lease, may be included in the transportation. But again, we need to wait and see what the regulations stipulate, exactly fall within that transportation definition. So in our sample here, we added up our other costs eligible for forgiveness during the 8-week forgiveness period, and we've got about $52,000 in other costs. And once we go through those two exercises of payroll and other costs, we've kind of identified the universe of expenses during the 8-week period that may possibly be eligible for forgiveness. So the next step, we're going to go over to page 4 of the materials. Part 1, you can see our summary here of what we have. So in employee payroll, after we back out excess compensation and non-resident U.S. compensation, we have about $135,000 of payroll costs paid. And our other costs are about $52,000. And now we're going to talk about the first of three other limiting factors that could apply. And the first one that was promulgated in the SBA regulations that have been issued is that they're going to allow 25% of your total forgiveness amount to be attributable to other costs. So in our example here, you can see that although we had almost $52,000 of other costs paid that could be eligible for forgiveness, we have to limit that to $45,000 to make sure that it's not in excess of 25%. It's a little bit of uncertainty on the order that you apply these limits, and I'll discuss that again as we go through the other ones. But that's the first limiting factor, and that applies to other costs not being able to be more than 25% of your total forgiveness amount. The next factor has to do with your employee count, and that's you're counting your full-time equivalent employees during the 8-week covered period for forgiveness, and you're comparing them to one of two options. And to get into this more detail, I'm going to go ahead and flip to page number 8 of the materials. So the first thing you're going to always do when you're applying this limit is look at your full-time equivalent employees during the 8-week forgiveness period. That's to the left of the page. And you're going to look at your full-time equivalents for each pay period that you have in the forgiveness period, and then average that out. So in this example, our sample applicant had about 11.25 FTEs during the forgiveness period. And then you're going to consider your FTEs during one of two options. The first is prior year around the same time, and the time frame is 2019 period starting February 15th through June 30th. So you look at the prior year, do the same method, average FTEs on each payroll period, and average those together. You can see on this sample, our sample applicant had 12.89 FTEs during this first base option. The second option that you can use, that as long as you're not a seasonal employer. If you're a seasonal employer, you must use option 1. But for most applicants, they're going to be able to also consider the FTEs they had for the first 2 months of 2020. So in our sample here, our applicant had more FTEs for the first 2 months of 2020 than they did last year. So it's going to be more advantageous for them to use the prior year FTEs of 12.89. But you can see in either circumstance, they did have a reduction in full-time equivalent employees as compared to the 8-week forgiveness period. So now I'm going to go back to page 4, and you'll see how that calculation is working. We apply the limit by looking at the FTEs during the covered period, in this instance 11.25, dividing that by our lowest base, which is 12.89, and we get 87.28%. So we take our total expenses eligible for forgiveness up top, 179,000 times 87.28%, and this is our new reduced forgiveness amount. That's the second limiting calculation. And then finally, the third one we're going to talk about is the limit based on reduction of compensation. So to get to that, I'm going to toggle through to page 9 of the materials. So this one, unlike the FTE calculation, is really done at the individual employee level, not necessarily globally. So are you going to consider any employee who did not receive wages prorated in excess of $100,000 annually in any pay period of 2019. So in this specific example, our applicant has a bi-weekly payroll period, and if we prorated the 100,000 down to a bi-weekly payroll period in 2019, they would throw out any employee who received wages in excess of $3,846 in any pay period at all in 2019. And it's going to be advantageous for you to exclude employees, because including an employee in this calculation can only reduce your forgiveness amount. You cannot get additional forgiveness if you increase compensation. So you're going to want to make sure you exclude any employees that can be excluded from this. So as we go down on the page, we're listing out any employee who did not meet the criteria of receiving excess wages in 2019. And then you look at their compensation received in the previous full quarter. So if the PPP loan was received in second quarter of 2020, like it will be for most people, you're going to look at the employee's wages received for the first quarter of 2020. And we've taken some liberties here on the calculation because the previous quarter is a 12 to 13 week period. We're prorating those wages down to an 8-week time frame to compare apples to apples as far as total compensation received during the previous quarter as compared to the compensation received during the 8-week forgiveness period. You're allowed to reduce compensation by 25% on a per employee basis without being harmed in this calculation. But if you reduce any employee's wages in excess of 25%, then your forgiveness is reduced pretty much dollar for dollar for that excess reduction. So you can see we analyzed every employee. Some employees were not cut more than 25%, some were. If we add up the excess reduction for the employees that were reduced more than 25%, you'll see the total is $9,815. So our forgiveness needs to be reduced by that amount. So if I go back to page 4, you'll see that after applying these limitations, we started out with total expenses paid, payroll and other, of $260,000. And then after we apply the various limits as far as compensation in excess to, I guess, highly compensated employees, at least what the CARES Act considers highly compensated, back out compensation to U.S. residents, apply the 25% forgiveness limit on other costs, and then apply the FTE count reduction, employee compensation reduction, where we're down to total forgiveness of $147,000. And then if you look in the middle of the page, you'll see the italic reference there. The SBA is going to prescribe in their regulations a method whereby if you reduced either compensation or your FTEs during the period of February 15th through 30 days after the CARES Act, which would be April 26th, if you reduced your FTEs or compensation to employees during that period, but then you restore by June 30th back to your pre-February 15th levels, the FTE limit or the reduction of wages limit may not apply to you. We really need to see what the regulations say as far as how that calculation is going to work. And then another thing I want to point out is you can get different results depending on the order that you apply these limits. So In this sample, we're doing the 25% other cost limit first. Then we're applying the FTE limit. Then we're applying to the limit based off of reducing employees' wages. If I were to alter the order in which we applied these limits, you would get a different result. So we're waiting, and the CARES Act bill and any kind of guidance issued to date does not stipulate that order. So we do need to monitor what the forgiveness regulations say in that regard, and we may need to alter this calculation depending on the order that you apply these limiting factors. So that is the sample calculation. Like I said, it's subject to change until the regulations come out. And then once the regulations do come out, if we need to alter anything, we will, and we will disseminate that information to you as well. So with that being said, we're going to go ahead now and move on, and we're going to discuss items that have not been addressed yet that we expect to be addressed once the SBA issues its regulations on forgiveness. And the answers to these items are going to be important, because once we know the answers, then you can really hone in on your strategy as far as how to maximize the total amount of forgiveness that you're going to be able to receive. The first one is the 25% limit, and just in general, the order that you apply the limiting calculations on FTEs, other costs, and reducing salaries. We need to see what the regulations say on that. Then on the FTE limit in total, we also are interested in what exactly constitutes an FTE when you're doing your baseline calculations. And that has not been defined in the bill or the regulations yet. If you look at other things like the Department of Labor guidance or the Affordable Cares Act, you'll see about 30 hours a week in general is what's considered an FTE. So if you have an employee that works 30 hours or more, they would be one FTE. And you don't go over one. So if you have an employee that works 60 hours during 1 week, they would still be one FTE. That's for the Affordable Care Act. We don't know yet whether or not the regulations are going to comply with that or change it all. And also, you could have an employee that could count for a fraction of an FTE. So whatever the FTE limit is as far as number of hours worked, if you have an employee that works half of that, then they would probably be 0.5 FTEs. But again, we need to monitor what the regulations say on exactly what the mechanics are going to be when you figure out the total amount of FTEs you have in one pay period. On the FTE front, another thing that we are monitoring is that calculation whereby you're supposed to not be penalized if you restore your employment. We're not sure whether or not you're going to have to retain employees for a certain time frame after that 8-week period, whether or not there are going to be rules on hiring related parties or individuals that are compensated at a lower rate. So there are a lot of issues, that could have to be considered on the FTE limit in general. Moving along to the reduction based on reducing salaries. Again, I talked about, as we went through that slide, kind of the liberties that we were taking in terms of prorating the quarter down to an 8-week period and using that to compare compensation. Also, we don't know how things are going to be addressed, such as if an employee voluntarily leaves or works less hours during the 8-week period, whether or not the forgiveness would be reduced for that, or maybe their pay rate would stay the same, but if they chose to work less hours, whether or not they would give the applicant any leniency on the calculation for that. Again, you do have the option or the ability to have this calculation not reduce your forgiveness if you restore compensation by June 30th. We don't know whether that means you restore it cumulatively or you restore the compensation on that date. We need to see what the regulations say on that. We're not sure on whether you would include bonuses or overtime. So there's a lot of different details to be cleared up on that limit as well. Another thing we need to consider is as we went through these, we said expenses that occurred during the 8-week forgiveness period are what we count. The CARES Act says that in order for an expense to be eligible for forgiveness, it needs to be both paid and incurred during the 8-week forgiveness window. And those can mean two different things. Paid is pretty self-explanatory. You do have to make the payment, but incurred could mean different things. So, for example, you could have a business who gets their PPP loan. I know I have several clients that are in this situation where they got their PPP loan funded, and then the next day they had a payroll. So those costs were definitely paid in the 8-week forgiveness window, but the wages were earned by the employees before the window. And then on the back end, you could have an instance where the wages were earned by employees during the 8-week forgiveness window, but paid after it. So if the regulations say, we're going to keep this simple, if it was paid during the 8-week window, then it counts for forgiveness. Then, we may be in a situation where we need to do payroll cutoffs to make sure that you're paying through the 8-week period on the last day of that period. But again, I wouldn't change any of that right now as far as your regular pay periods go until we see a further explanation from the SBA. Again, also in that realm of compensation, you could have things like retirement contributions or bonuses paid during the 8-week time frame that are attributable to work done, not only during the 8 weeks, but really, throughout the year. We don't know whether or not those are going to count in total or whether you're going to have to prorate those things down. But that could certainly impact some decisions that you make during the 8-week window regarding bonuses or retirement contributions and things like that. As far as the other costs, examples of that what we hear a lot are things like rent. You could have rent that is for the month of July that's due at the end of the 8-week window. Ideally, you'd want that to count towards forgiveness. But again, we need to see what exactly the SBA is going to be considered paid and incurred to count as a eligible expense. We mentioned transportation. Most of the utilities are pretty self-explanatory. Transportation could involve a lot of different things. As simple as gasoline for business vehicles, and you could expand that to lease payments on autos, mileage reimbursements, things like that. So certainly a more liberal definition of a transportation cost would be helpful for applicants. But we need to see what the regulations say on that. In the rental sphere, we talked about equipment leases. If it's a true lease on equipment or automobiles, we're hoping that does fall in the definition of a covered rent obligation. We'll have to see. And then you could have instances also. I know we have clients who maybe own the building that they operate out of in their business, and they own it in a separate legal entity or personally, and they pay themselves rent. The bill does not specifically exclude self-rental payments. We're hoping that the regulations do not as well. We need to see what they say. Also, the bill says it needs to be a leasing agreement in place prior to February 15th. So we'll need to see if they're going to require a written lease, or if past history or nonverbal leases are included. Again, we would have to wait and see what the regulations say on that. Next bullet point, when we talk about interest paid on a mortgage. And then you could have debt of a business for things like lines of credit that are not backed necessarily by real property or equipment of the business. Maybe they're backed by a personal guarantee of the owners or accounts receivable. The bill says that you can use PPP loan proceeds to pay interest on those types of debts. That it doesn't have to necessarily fall within the definition of a covered mortgage. However, on the forgiveness side, it must meet the definition of a covered mortgage to count for forgiveness. So we'll have to see, perhaps the regulation will allow also for interest paid on things like line of credit to count in that other cost category. Another thing we expect that the regulations will address is really a comprehensive list of exactly what types of documentation they're going to require to be submitted with the forgiveness application. We expect, you're going to have your quarterly payroll tax filings included in that, your state unemployment, which would also include documentation of compensation paid to individual employees as far as total amount and pay rate. You're going to have to submit canceled checks, probably bank statements as well. But we expect the regulations will list everything that you're required to submit with your application. And then finally, other issues subject to interpretation and administration by the SBA. I'm sure the regulations will address things that are not included on this sheet, and the SBA does have a significant amount of leeway when they are administering this program. So things like the 25% limit on other costs, or applying the annual 100K cap to wages only, were not necessarily included in the bill itself, but it does fall within the jurisdiction of the SBA to administer the program and establish the rules for that. So the SBA does have a lot of leeway in establishing, the rules and how it's going to administer the program. And then finally, at the bottom of this sheet, page 10, we've got some other issues that are unresolved, probably will not be resolved in SBA regulations. The first one, and this is getting into the income tax world, is the tax impact of the PPP loan. One thing we know, because it's in the bill, is that the loan forgiveness is not going to be considered taxable income. Under normal circumstances, if you have debt that is canceled, unless you are insolvent, that cancellation of debt is a taxable event. The bill, the CARES Act, does stipulate that this cancellation of indebtedness on a PPP loan is not taxable income, which is great. What it does not address is whether or not you can deduct expenses that were paid and then later forgiven. I'm referencing an Internal Revenue Code section here, 265, also a court case, as it pertains to expenses paid with tax-exempt income. And this is going to fall under the jurisdiction of the IRS, not the SBA, like the other issues we've discussed previously. So the IRS has not opined on whether or not it believes or it will try to apply section 265 to any of these expenses that were paid that would normally be deductible but were eligible for forgiveness under the PPP program. I expect that they will eventually, but they're going to work on their own time frame. But that's something we need to monitor. As for now, I would probably plan on them not being forgiven, and then if they are, not being deductible, and if they are, then that's great. It's a cherry on top. But as of now, that is certainly not a given. Finally, last section, we're in the second round of PPP funding. There's a possibility that more funds could be appropriated to the program. We'll have to wait and see about that. It's unlikely that everyone who's applied for a PPP loan is going to get their funds in the second round. That we're going to probably look at the funds being exhausted again, and then maybe not, Congress will appropriate more money. And also, will the covered 8-week period be extended? It's possible, but for now, you just have the 8-week forgiveness period to consider in your forgiveness calculation. So that's a list of issues that we expect to be addressed further in SBA regulations. As I mentioned, once those regulations do come out, we will update this sheet. We'll get you answers to this, plus any other issues addressed in the regulations that we think are going to be pertinent. So as soon as that comes out, we will get that to you. The next slide, this is from an AICPA webinar, and this is the restoration of forgiveness that I mentioned. If an employer or applicant restores FTEs or compensation prior to June 30th. And this is an example of how it may work. If you're someone who has, reduced employees, maybe you were shut down entirely during, the period from February 15th to April 26th, this is going to be important to you potentially if you would be adversely affected by the FTE count or compensation reduction count. And maybe if you restore by June 30th, those reductions, you could increase your forgiveness. Again, this is an example, but we need to wait and see how the SBA stipulates this is going to be applied. And until then, all we can do is kind of read the bill and try to do our best interpretation. Finally, the last part of our materials that I'm going to discuss is our cheat sheet. And this is going to be on page 13 of the materials. So this is just a concise list right now. If you do have your PPP funding or anticipate getting it, what can you do right now in the interim between now and when the regulations are issued to make sure you're following best practices? In the first, at the top, we kind of have a do and do not. So first, we certainly recommend that you establish a separate bank account for your PPP loan proceeds, and that you use the funds in your PPP account to pay for costs that fall within the definition of allowable uses. And this is just to make the accounting easy, to show that you are using the PPP loan proceeds to pay for things that you're allowed to pay for. We recommend that you do not commingle the loan funds with other business accounts or personal accounts. It's just going to make the accounting for the expending the proceeds a lot more complicated. We recommend that you keep adequate records. And we know right now that's definitely going to be canceled checks, bank statements, payroll returns, and other things like that to document your payroll. Certainly keep adequate records of that. We know that's going to be required to be submitted with your forgiveness calculation. We recommend that you kind of look at your FTEs during the the relevant baseline periods right now. We don't know exactly what the definition of an FTE is going to be, but we do know the period. So I would kind of look at where you are now on your FTE numbers, compare that to the relevant periods, and see, you know, whether or not that is going to be something that could potentially reduce your forgiveness, and then think about ways that, if it would, that you can remedy that, whether that be boosting your FTE count or maybe restoring by June 30th once we have additional details on that. We recommend that you kind of start planning for the forgiveness now, before your 8-week period is up, because if you wait until the 8-week period has elapsed, then you know you're going to have your hands tied behind your back, and your forgiveness is going to be whatever it is. Whereas if you start planning for it now, maybe you can see some things you can do to increase the total amount of forgiveness that you're eligible for. And then finally, we recommend that you promptly submit a loan application for the forgiveness, you know, as soon as you have the rules for it and your 8-week period has elapsed. You know, there's no point in waiting past the 8-week period. Once you have the rules, and to go ahead and get that into your lender. Once you do submit it to your lender, they have 60 days to go ahead and verify the total amount that you're eligible for and get the forgiveness process started with the SBA. Finally, on the cheat sheet, you know, we do have also the allowable expenses. We do have a brief description of the limits that we talked about as far as employee count, reducing compensation, and the exemption for rehires as well. And that's through page 13 of the materials. And once you get past page 13, you kind of get into the appendixes that we have. Some useful information. First, illustrations from the Chamber of Commerce as far as, you know, who's eligible for the PPP program, how much can you borrow, and then how the forgiveness process works. And then we follow that up with the authoritative sources of information that we currently have. And that's the actual text from the CARES Act bill, the 3 SBA interim final rules that have been issued to date. We expect there will be more, and certainly on the forgiveness front. And then finally, the frequently asked questions that the SBA has put out, and they constantly add to their list of frequently asked questions. The last edition they had occurred on April 26th. So we expect that they'll certainly add more to this list of frequently asked questions, but this is the best information that we have to date on how this program is going to work. So that concludes the materials that we had to go over. Again, we'll have the Q&A session after this, but for those that maybe need to run, I want to thank everyone for joining us. We know that your time is valuable. And on behalf of all the partners and everyone at KL, we do sincerely appreciate the opportunity to be of service. You know, we do take our responsibility as your trusted advisor very seriously. And as time goes by, we'll continue to endeavor to provide timely, useful information to you as we navigate through this COVID-19 crisis and also beyond that. So I'll get into the Q&A session. I'll throw it over to my partner, Ricky Rumney, who's been monitoring the chat window, and see if we have some good questions that we can answer now. And like I said, if we can't get to your question, certainly follow up with us, follow up with the manager or partner, or any contact that you have with the firm, and we'll try to get you an answer as soon as possible. So, Ricky, you want to take it away?
Can I ask a question? This is Lane Tripp again. I still do not have access to submit a question by chat. we haven't been designated as members of the session. And apparently, according to the pop-up that I see, unless you allow us to be or classify us as members, we can't use the chat feature. If you can't get that activated, do you want us to email questions to whom? Anyway, thank you for considering that.
Yeah, Chris, see if you can activate that. I think he tried to do that, and we thought we had it active, but he's going to check on that. We obviously will not probably be able to get to all the questions, but you can send us an email at info@kl-cpa.com, the same email address that you responded to. In order to send those questions, we'll make. So while Chris tries to enable that feature, Dean, let me give you one of the first questions we have is, client says that they match the 401k in a timely manner for the employee deferral portion. However, waits till the end of the year until the census report is done to fund the profit sharing component of the 401k. Will they be allowed to pre-fund that profit sharing component? And if so, will the entire amount be included, or do they have to prorate 2/12 of the profit sharing component?
Yeah, that's a great question. I would say right now, you're probably good on the match because that's specific to when the wages were earned and you're paying that part. As far as the other profit sharing component, we really need to wait and see what the regulations say. And, whether or not you're able to prorate, or if you can count the full amount paid, as part of that forgiveness calculation, that could certainly alter some decisions you make on when exactly you pay the match, or if you do an estimate of what that amount would be and fund it, prior to the 8-week window elapsing.
Okay. I'm not sure if Chris wants to jump in and see if he's able to fix that chat feature, but another question we have is, will you be able to give employee bonuses to those employees who are under 100,000 annual compensation threshold to help increase loan forgiveness?
Yeah, that's another good question. That's one of the details we don't know the answer on yet. It's kind of I'm still scaring my screen on page 10. Our annual bonuses to be included in determining compensation. So again, that's another issue. We don't know for sure yet. And if they are, it can certainly affect the timing on when you choose to pay those bonuses.
Okay. Dean, it appears as if maybe because when people logged on, when everyone logged on, they logged on whether it was a presenter or as an attendee. So Chris is saying that everyone would probably have to log back out and log back in order to send a chat. So I don't think that's going to work. So he did have a couple that were coming through that info@kl-cpa.com address. So I'll read a couple of those as well. If you pay companies such as Paychex to do your payroll, is that a forgivable expense?
Yeah, so the payment of a payroll processing fee, we do not expect will be a forgivable expense. So we think you'll probably need to back out any payments, for payroll processing. If you paid them from your PPP account, that you would not be able to include those as in the definition of payroll.
Okay. Should we transfer the PPP funds from the new bank account to the operating account, or should we change everything over to the new account?
It's really going to be a matter of preference as far as how to make the accounting for it easier for you on the back end. I'll say that, you're just because you pay from an eligible expense from an operating account and not a PPP account, that doesn't mean that you're not going to be able to get forgiveness on that. You just really need to kind of make sure that the method that you use works out best for you on the back end in accounting for, your expenses and how you use your PPP loan proceeds.
Okay, what about partners of a partnership or sole proprietors who do not normally take payroll, obviously? Do they need to take bi-weekly, bi-monthly, or monthly draw checks to substantiate payments for proof of use of fund?
What we know from the interim final rules that existed on the application side is that they are going to consider payments made to partners and forgiveness. If we did not have detail prior to the expiration of your 8-week forgiveness period, I would certainly physically pay partners $15,385 to make sure it's physically paid during that 8-week window.
Okay, I know we wanted to keep it to about an hour, so let me go ahead and ask one last question is, what about the portion employers contribute to an HSA on behalf of the employee? Is that part of the health insurance benefit? And also, it's another question. Did you also say that the owners in a partnership may be included in the payroll calculation?
Yeah, Ricky, so you cut off there, but I did get the part on an HSA payment. I would consider that is probably going to fall within the definition of an expense for administering your group health care set of guidelines on what exactly the business is going to pay for. And if you are matching an HSA contribution, then that would likely fall within the definition of an eligible health your health benefits eligible. So we certainly do have a lot of questions, and like I said, we're probably not going to be able to get to all of them, but please do follow up with your manager or partner on your account or any contact you have, and we will get you an answer as soon as we can. Or if it's something that we need to wait for the regulations, we'll add that to our sheet, and we will get you an answer as soon as we have definitive guidance. So again, thank you, everybody.